You want a really nasty surprise financially? Don't go check out your properties. Don't go check on your management team. Just sit back and just hope everything's working out. And then when it comes time to sell, they're wondering, how come I'm not getting as much as I thought I would be getting in selling the property? Why are we having these issues? Why are we having these problems? Etc., etc., etc. Welcome to the Heartland Multifamily Show, the shorter, more profitable path to multifamily ownership and investing. Everybody, it's Darren and Isaiah. Hi, Isaiah.
Hello, Darren.
And this is another episode of the Heartland Multifamily Show, the place
for all things multifamily.
And so let me ask you, if I were to tell you that we're going to buy a property in, I'll just say Orlando, Florida, what's the biggest problem you think we're going to have after we take over that property?
Management.
100%, it's management. But what do most people end up doing when it comes to choosing a management company?
I'm sure they Google management companies in Orlando, Florida, and go through maybe the top two, and then call them and pretty much hire them on the spot.
And what do they use as their barometer for picking which management company they're going to go with, do you think?
Fee.
100%. Now, again, this is not everybody, but this is the majority based on our experience. They'll choose how much fee are they charging, and then they'll go with that. These guys are the lowest fee. They've told us the best story. They've got the lowest fee. We're going to go with them. But what's the most important thing that you need to do before you choose that management company, Isaiah?
A little bit of studying, a little background information.
100%. 100%. So let me give you two quick strategies you need to employ before you hire any management company, especially if you're out of state and out of market. This is a must, guys. I have seen this over and over and over again being a mistake people are making, and it costs them, I can tell you, it adds up to millions of dollars easily, not to mention time, effort, energy, and all of that kind of stuff. The first thing you need to do is you need to go yourself and look at properties that they currently manage. Again, we're buying that property in Orlando, let's say. Mm-hmm. Are you and I going to get on a plane? Are we going to fly down there, meet with management companies? And then what are we going to tell them that we're going to do when we ask them for a list of properties that they manage?
Go check them out.
We're going to go check them out. You're damn right. We're going to go see in live action how good of a management company they are. And when we go there, do we act like we're investors and owners and we're going to walk around there and, do we act like that?
No.
No. What do we act like?
Just minding our business, keeping to ourselves.
Yeah.
Just checking things out.
We act like we're staff. We act like we're, the painting contractor or the cleaning contractor or the insurance person. Guys. That's what we do. Because we're going to check and see if what they tell us is what's really going on. Okay? And you'll be shocked at how many investors buy property out of market, out of their area, and they don't do this. They just get on a Zoom meeting, have a couple conference calls, and think that's like the most that they should do. Wrong. You got to go check it out. That's number one. Number two, and you hit on it again, we need to ask for at least 3 references. So not only do we want to go look at their properties, you better give us 3 references on people that you're doing business with right now or have done business with. And guess what? If you can't produce 3, we're not having a conversation anymore. Have we gone into the world of ultra sophistication here? No. This is pretty damn common sense like things, right? But again, you'll be surprised at how many people don't go check out the company, check out the properties that they manage, see how they do, what kind of job they do, and they don't ask for references. And you're buying an 8 unit, an 80 unit. We had, about 6 months ago, we manage our own property. So we're not in the management business, right? We had some people call us that were looking at buying a 100 plus unit property here. And they were planning on having a conversation with us and possibly engaging us to manage that property before they knew hardly anything about us. They were just like ready to go. They just wanted to get it off their plate. We'll just turn it over to a management company and not have to worry about it. Bad idea. Okay, so we've covered 2 major things that an absentee owner and multifamily owner, landlord should do that most aren't doing. And if you want to be successful as an absentee landlord, if you've done these 2 out of 3 things so far, you're well on your way to making a good decision. But there's a third one. And let me ask you this question, Isaiah.
Okay.
Do you think we've bought that multifamily community in Orlando?
Okay.
Now, do we just sit back, not check things out, and hope they're just doing a great job?
No.
No. How many investors and landlords that we've talked to that are active, overseeing it, kind of guys, how many of them, what percentage would you say don't do that?
70.
Yeah, at a minimum. This is a huge mistake. What ends up happening is people turn everything over to the management company and they never go check things out. They never do the old Ronald Reagan line of trust but verify. You've got to be checking things out, guys. I can't tell you the countless number of owners and investors that have called us to engage us to sell their multifamily properties. Why? Because the properties are in a shambles. They're an absolute disaster. Everything's a mess. Why do you think one of the main reasons, Isaiah, is that the properties are in a mess?
Because they didn't do their due diligence and come back, check in on their properties when it could have been stopped a lot sooner. Instead, they just wouldn't go back, check on how everything's doing. So now it's too far gone.
It's ultimately amazing to me that people don't do this. It blows my mind. You want a really nasty surprise financially? Don't go check out your properties. Don't go check on your management teams. Just sit back and just hope everything's working out. And then when it comes time to sell, they're wondering, how come I'm not getting as much as I thought I would be getting in selling the property? Why are we having these issues? Why are we having these problems? Et cetera, et cetera, et cetera. Why? They're not checking on things. Now, are we saying, Isaiah, that you need to micromanage the managers?
No.
No. I mean, on the other hand, we're not saying that you micromanage and have, 3 calls a week, getting updates and status reports. No. We're not saying that at all. But you better damn well be checking up on them and checking up on your property. And if you're dead set on owning property outside your geographical market, you better be doing these 3 things. Okay, and let me go over them one more time. Number 1, you want to be asking for 3 what, Isaiah? References, right? References. You want to be asking for 3 references. That's number 1. Number 2, you want to be going there. If not you, it better damn well be somebody you really, really, really trust. Okay? And they're going to check what out?
Everything.
The properties, right? What properties are they managing now in that market? What do they look like? How are they behaving? What's the tenant mix like? What's the feel? What's going on? What's the neighborhood like? You want to be getting into that. So those 2 things are mandatory, all right? But what is ultimately number 1 mandatory is after you've made that decision, they've given you those references. Check. You've checked out the properties that they manage and you're satisfied with what you see. Check. You then go and you verify from time to time that things are going and operating like you are being told they are operating. These 3 things are key. Now, again, with what we've talked about, do we reveal anything here that's like super sophisticated and hard to do? No, this is all easy. But guys, 80+% of the people that we talk to and that we deal with in this space don't do this. And of course, the majority of them are having issues and problems that they wish they never had. And they could have avoided many of them if they would have just done these 3 things. If you want to get your hands on more great multifamily real estate content, make sure you click here. If you want to invest passively in great multifamily real estate, make sure you click here.